Very good morning to you traders. Mark here from Daytrading Room. Okay, yesterday, or sorry, a couple of days ago, talked on the video about capturing this fake out type move when you're looking to trade in the direction of the trend. I'm going to flip that on its head now, and we're going to say, how do we look to catch the bottom of the market? And yes, I know we're going to hear gasps from those at the back saying you can't catch tops, you can't catch bottoms. I disagree. Okay, now it depends on how you approach it. If you're just stabbing at the lows, if you're just stabbing at the highs, going short in front of a freight train, then that isn't a strategy. That doesn't work, and you're going to get run over because you're right at the peak of the momentum, and generally at the very, very top of a move or at the very, very bottom of the move, you get an accelerated burst, and if you're too early on it, that accelerated burst is what causes you to get stopped out. However, if you're timing your entry, if you're looking for something specific, there's no reason you can't get near to the top or near to the bottom of a move, especially if you're watching it actively and if you're waiting and you're prepared. And Paul Tudor-Jones talks a lot about how he captures tops and bottoms, because it's actually a very, very powerful trade. If you can catch the bottom after a large move or near to the bottom, you're getting that initial reaction back up as you're on the very first rung of the ladder, and then you've got a choice. You've got loads of options. Then you're in a position you can either take it off the table, or you can bring your stock back up, and you can then be part of a larger counter trend move. So it's from a perspective, a trader's perspective, it's a very powerful position to be in if you can get yourself in that position. But it's a challenging trade. It's not an easy trade to step right in front of it when it appears that it's very, very worst, and as I say, timing it is very important. If you get it wrong, then you're just gonna push you straight aside, clears you out, and you're just gonna get stopped out. And the danger as well is, if you're always looking to buy the bottom, if you're 5 days early, then that's 5 days of wasted time when you're always trying to buy a bottom, always trying to buy a bottom, always trying to buy a bottom. So you've got to have some caution with it. But anyway, let's talk about some of the ideas and the way to do it. DAX is a good example here. This is the trade that I did this week, and I'm going to talk about a trade that I'm now looking for in crude oil. So DAX, we pushed down and we talked about that huge gap up, the huge gap down, the drive up, and the pull back, and the range fake break type trade when we're looking to enter in the direction of the trend. This is slightly different. So the next day I'm thinking, okay, we've come quite a long way on the DAX. I would use some sort of counter trend push. How am I going to find a good place to go long on that? I'm not just going to go long in the middle of this chop. If you can assume that this is where we are now, I'm not going to go long anywhere here, because why would I? It could easily come down back down to this 8,700 level. It could just as easily go up to 8,900 level. To me, there's no real edge in that position unless there's some sort of catalyst and we're seeing a really strong move with good volume and a pullback. That's a different type of trade. So for me, there's only two ways of doing it. One is you're waiting for like an opposite of a range fake break, where it breaks out and then holds. Instead of coming back in and we're taking that short, it starts to do some work above. Maybe it pushes on hard. That to me is a reason to get long. Another one which I prefer, which gives you a little bit more, is a little bit harder to time, but it gives you a bit more defined levels to work off. It's just generally in from a short-term trader's perspective, a nicer way to do things is to get a level to work off to the downside and then see how the market reacts when it reapproaches it. And this is the trade I did on the DAX. 8,700, a very key level. We pushed off it the day before. We came down and just tested it. I'm just waiting. I'm not going to dive in at that level because we could flush right through. I definitely not sitting at 8,700. I want to see the response. And to me, there was two things that could happen which were going to get me into the trade. Okay, assuming this is the level down here. This is our 8,700 level here. It comes down. It's either going to bounce straight off it, or we're going to go through it. We're not going to get involved, not going to get involved. Let it go through, let it run, let it do what it wants to do. If it's going to carry on running, it's no trade. They're not going to step in front of it. If it goes through it, then pulls back up, and we get that little tiny fake, a little tiny probe, and we don't see any more sellers, then there's my long entry, and then that's the trade that's initiated, and obviously the stop's going to be there, and whatever your targets may be. We got this first one. In other words, we bounced straight off the 8,700. Now, when I saw that, and then we saw some decent strength coming in, you know, I took a long position with a stop under that 8,700. Yes, maybe, you know, traditionalists are going to say, well, that's a silly place for a stop. But the idea was that I was thinking that we hadn't seen any more sellers coming through to drive under the 8,700. We still were in the middle of the day. You know, can we get a counter trend push back up above the sort of average VWAP price, maybe back up to the highs? You know, there's some strength coming in, waited for the little pullback and took the trade. And it worked out okay. I didn't hang about on this. My plan is never on this counter trend trade to think that that's the bottom of the DAX for the next few days. I think it's very feasible to say that if you've got a good position, you take some off the table and maybe look for that 2-day counter trend move. That's absolutely fine. But for me, you know, a 70, 80 point trade as it just pushes back and unwinds off that low, it is fine on a counter trend move. So you know, that's just one way of timing, and it wasn't far off the low. And you know, you can say, oh well, it's not, you know, really close to low. It doesn't really matter where you're taking the trade. For me, it could have been anywhere, but it's just a position, and it was just thinking about what was happening. We'd already bounced there, we'd already seen buyers there, we're quite a long way from the top. You know, so for me, and when I saw there was no follow through, it was worth a go. So let's talk about crude oil. This is the one coming up, and this one I'm watching with intent. Crude oil, guys, at the moment, the November contract on this chart, it's just been hammered. You know, it's just been completely in a downdraft. I mean, we had a steady down drive from over the hundreds, but the real one was the last since the start of October, late September, where we've just really just the floor's just the rug's just been pulled, and we've just driven down hard from sort of mid-90s all the way down to, you know, almost $80 now. Today as we stand, we're on the November contract 18.90. I think we're as low as 80.30, something like that. What is the low today? 37. So I'm looking for a buy here. I did talk about how I'm not going to be shorting into lows, and that's, you know, just generally me. There was some meat there, and anyone who did do that has probably got a few dollars cushion there, and fine. You know, that's a fine strategy for me. You know, I don't like to chase things. I want to try and catch that. I don't mind chasing when we're initially getting a break and we're initially seeing a sort of move on volume. That's different. I've talked about that before, where you get the drive, the pullback, or the drives, but it's got to be at the start of a move. You know, if we've done this loads and loads and loads, and then we get that, to me it's quite late in the day. And yes, it's going to work from time to time. There's no hard and fast rule, as we know we're trading, but I just generally find the later on in the move, the more light inclined I am to look for the move in the other direction. Or if I really don't want to trade long from after a big push down, let me reshort it much higher up rather than chasing it with only a slight pullback. So that's why I said in the last video I don't want to be chasing it short down here. So anyway, looking for the long on crude at the moment. What do I exactly want to see? I want to see what I haven't seen yet at all. Okay, I'm looking yesterday at this low we had across here, and similar with the DAX situation, but you can see how this is different. We got to that low, but this time we just went straight through it. There's no trade on. If we'd have done this candle here and then subsequently pushed back up on volume, I'd have been all over it. I'd have taken the trade, and I'd have looked for a break out of those highs, and it would have been a couple of dollars, $2.50 type of target on the trade. But we didn't get it. We just literally held and drove straight the way through. No trade. Cancel the trade. There's no setup, and you can see how the difference is that compared to the DAX, and how it keeps you out of trouble. You don't have to just be putting your order there. For me, I prefer to wait to see what happens after the test. To me, that's the key to understanding price action, is to look at the test. What happens after the test? Do we immediately bounce off it? Do we have buyers in it? Suck out some sellers? Take out some stops? What actually happens? While the test is happening, it's difficult to get that information, especially if you're looking for, you know, something more than a 10-tick scalp. Then you know, for me, it's better to wait, should I say, and see what the test does, see exactly the results of the test. So anyway, nothing going on there, so I'm waiting. After hours, sorry, that was right up to the pit session close, and then we sort of drifted higher. But again, this isn't that high. I want to look at for two things. I either want to see a big flush, which this was a flush, this counted very much as a flush. But then after the flush, I mean, sometimes you can buy that flush if you time the flush well. It works well. It works well intraday on the US indices. When you can look at the ticks, you can look at other stuff. For me, I just didn't fancy the flush on crude oil. Yes, it would have been a reasonably profitable trade if you had timed that nicely. There's at least $1 in it. Fine, whatever. But I just want to see some strength after weakness. So I want to see the flush first, and then I want to see immediate strength, good volume, good straight up move, holding, no retesting, just holding, then again another leg, that really strong candles that you get after the flush. And we didn't even get it. This is a 15-minute chart here, and you can see how long it took for us to claw back, not even 2/3 or whatever of that last final candle. That's pretty telling stuff. And really, guys, if this had been at the start of a move, that would have been a nice short setup, having the drive lower on volume and the really pathetic climb up for a re-roll over. But as it's very, very late in the day, as a rule, I don't take them, as I just explained earlier. So I'm looking for that. I'm either looking for a big flush and then an immediate drive back up that maybe takes out that flush. I don't mind buying $1 or $2 higher if the probabilities for my setup are much higher. So even though there'd be some guys who have a go down here, which is fine, for me, I want to see some strength, and I might be lucky enough to identify the strength immediately off that low. It might be, a midday type of flush, really goes down under maybe a key level like 80 or lower, and then pushes straight back up, and you can just see it. You can see the price action, you can see the volume coming, you can see the strength, and then the earlier you identify, obviously the better your trade's going to be. If you don't see it and it sort of creeps up and then it rips up and holds, you'll have to buy it higher. To me, price doesn't matter so much. I'd rather get the high probability trade. So that's what I'm looking for, either a flush that straight afterwards we see buyers, and that sort of indicates that that's the last exhaustion, the last of the sellers, and there's the overhang of supply is gone. But until you see that, because we keep seeing this drive lower and hold, drive lower and hold, I'm not interested. Okay, perhaps we won't get one more flush, perhaps we will just find buyers that come in. Either way, I want to see the strength now. We've come so far on crude oil. To me, I want to see the strength. I want to see either maybe we get a flush, a retest, and we get that DAX type trade that we talked about, where we get a little test lower and then a bounce back up. I'll be happy to take that with a quantified risk there. But it's just the second test. It's just seeing how the market's reacting rather than just stabbing at it. And I definitely don't want to be taking anything. Let me just clear this out. Like this, any buying around this sort of level, because to me it's no man's land. We're drifting back up. So what? We could easily do a flush and then pop back up. We could drift back up, and yeah, sometimes you do get a drift back up on bottoms happen like that, drifts back up, and then it just suddenly goes, and you think, oh great, I've got a dollar head start on it. I'd rather wait until it starts to exhibit the strength and then buy the pullback for that. I mean, ultimately we've got plenty of targets to the upside. There's plenty of room. It can push up even a day worth of push up and still be a good trade on day two. At the end of the day, I'm not looking to be a hero. I'm just looking for high probability stuff. Occasionally, as we talked about, you're going to get the opportunity where it tests that low and you end up buying a few ticks from the low. But I don't care. If I have to buy higher up and it's better, I will do that. So that's what I'm looking for on crude oil. Let's have a look today. It's right near that key level of 80. Maybe we'll flush through it, flush out, get rid of the last of the longs. Maybe we don't, and who knows? I'm not going to try and predict it. I'm just going to watch, review it at intervals, and just see how it's been behaving. It's definitely in play at the moment, but you got to be very careful with crude oil. 1 minute it just seems to be just chugging along. The next minute it'll do a couple of bars, 15-minute, 45-minute move where it moves a couple of dollars. So caution is advised. And the Dow, we will see what's going on with that, with the YM and the DAX. Keep an eye on those as well today, and some individual stocks. So that's just some ideas, guys, on how to sort of position for at the end of a large move, whether it's the upside or downside, as opposed to just stabbing at the highs or lows. Some methods maybe you can incorporate with your own strategies or the way you look at the market yourself, and see how how to position for those counter trend pops that we will get at some point, but it's a case of how far do markets go before you get the counter trend pops. And obviously, final thing is, if you're uncomfortable with that, fine. You know, you want to stay on the short side of crude, absolutely fine. You know, that's your strategy, and you want to wait for a drive back up to reshort it. You know, whatever. There's plenty of ways. People making money long and short on it. Whatever you prefer, whatever suits your personality. As long as the risk is managed, it's all good. Okay, take care, guys. Back with another video soon.